My name is Anna-Karin Hempel. I cover the real estate sector, both from an equity as well as a credit perspective here at Arctic Securities. And today I have the pleasure of having Sonja home, CEO of Entra. So first of all, for those who perhaps don't know Entra yet, could you just give us a brief description of the company?
We hold a leading position in Norway and have a strong both operational and financial model. We have a very focused strategy. We work with large, high-quality office assets located around the central communication hubs in the 4 largest cities of Norway. 70% of our portfolio in Oslo. And we work through the entire value chain, basically with the zoning part, the property development, and also property management. And we have a strong track record of providing profitable growth through our project development pipeline.
But you've been with Entra for a very, very long time, but you took over the CEO role now, that was during summer. Will you make any changes to the strategy? What will Entra look like, say, in a year from now, or in 5 years, and even in 10 years? What is your view?
Well, firstly, as you mentioned, I've been part of Entra's management team for the past 6 years. So I've been very impressed to see the level of competence in all parts of our organization. And that's basically what's enabled us to deliver on our strategy today. We have a very strong strategy, working with providing profitable growth, providing the best customer journey, and being an environmental leader. And it's worked very well, our strategy. So from my perspective, I have no plans of making any major changes. So it's more a question of tuning and making sure that we focus on the right aspects. So in respect of profitable growth, we have driven that mainly through our project development. We will continue to do that. And we also will continue to do selective acquisitions within our strategy. So just yesterday, actually, we announced an acquisition. We bought a property in Bergen. That's the 3rd property which we bought within the same cluster over the past 2 years. So building a strong cluster in the city center of Bergen, where we have a strong outlook. I don't want to set a growth target because it might give us the wrong incentives. We have a long-term horizon, and we work to make the right decisions in respect of adjusting our portfolio, in respect of what we believe to be right from a property perspective. And so to continue growth through the project developments and basically selective acquisitions as we've done previously is going to continue. And if you take a look at our second strategic focus area, which is basically to provide the best customer experience, there we have held the position as the top in class amongst our peers for the past 4 years. And in order to preserve that position, we need to be ahead of trends. And I'd say that we've probably seen more changes in the market and what our customers are requiring over the past couple of years than we've seen for the previous 10. And the drive for flexibility or demand for flexibility for services, environmental or sustainability is coming higher up on the agenda of our customers. So we definitely see that we will have to continue to develop our customer offering in respect of both flexibility and services going forward.
But does that make your job more demanding? Is it more considering these increased demands from your tenants? Well, was it easier before, or?
Yeah, I think actually that you could work more with bricks and mortar before, provide a building, and that's it. But I expect that you would see a bigger differentiation between the professional industrial players, which provide actually more like the hotel experience in the office. And other real estate developers. So we definitely expect that we have to be up there in lead, providing that experience. And technology is probably also going to be an important enabler in order to provide those customer experiences. If you take a very simple example, I think most of our customers have a headache with constantly having fully booked meeting rooms, right? And then you very often see that they're not even used. So just by applying sensors and connecting it to the meeting booking systems, you can actually release meeting rooms which are not used. Very easy solution, but if you look at a portfolio of 100 buildings, you have probably 40 different systems. So you need to work with the IT platform of your building portfolio in order to be able to scale these kind of solutions. But I think that's going to be important for us to basically be in a position to provide solutions which also removes friction in the daily life of the people using our buildings. And that may probably be a great opportunity also for the larger companies to be ahead of what we see other companies able to do.
But speaking about customer experience, and if we then move on to co-working, which is a big discussion theme nowadays, what is your view on that? Is it riskier to let to these kind of tenants than normal tenants?
Well, if you start looking at the product offering first, what we see basically is that these kind of concepts, they're basically providing, they're tapping into a value chain, right? And they're adding layers of flexibility, services, and a community or social dimension, right? And then they're pricing it up because they're adding those service offerings. And when they have managed to reach a market penetration of somewhere between 5 and 7% in a city like London, it's definitely customer driven. So we see that we have to be able to answer to these trends. In respect of risk, I think that's very dependent on your counterparty, whether you have the right locations. I mean, occupancy rates are extremely important in that perspective. And if you have the right locations and the right counterparty, the risk is well handled. From our perspective, we've chosen to take in 4 of our buildings, leasing out just a small part of the building to an international workspace group, which then basically provides the flexibility which we think we need in our buildings. And with a profit split model, we find that it, with the right locations, is also a good alternative. But we are also testing what it takes basically to operate these kind of facilities ourselves. We launched Rebel this summer, a house where we will be offering fully serviced managed offices, co-working, and also a knowledge sharing part of the concept. There we've taken in a partner to handle the conference, events, knowledge sharing. But that's going to basically learn us a bit more about what it takes to operate these kind of concepts.
But can we expect, now it's about 1% of the portfolio that is dedicated to co-working. Will that then increase going forward? Is that fair to assume? Or
I think it's fair to assume that you have to expect more flexibility in the portfolio. If a large corporate is out there asking for a new office space, they have no idea of how big they will be 5 to 10 years from now, right? So they need flexibility. So you'll have to see that in our contract structures in some way. But whether it's through an external operator or whether we do it ourselves in some kind of concept is too early to say. But an increased flexibility, yes. But that doesn't necessarily mean that you have to do it on a 3-month basis or a 6-month basis in rolling rent. It's maybe more like instead of doing 10-year contracts, they do 10 years on some volume and 12 months on some volume, right? So there are different ways of handling that flexibility.
But I mean, the property market is changing now. We see more co-working, it's more focused on the environment. How green is Entra?
Well, Entra has actually had environmental leadership as part of our strategy for the past 10 years. So we have worked very systematically with that as a topic and taken a 360-degree approach to it. reducing our own carbon emissions, working to influence our suppliers and changing legislations in order to enable greener solutions, working with our management portfolio. There we actually see that 80% of our direct emissions is related to the energy consumption in our portfolio. We've brought down the energy consumption with 40%. If you look at our project development, we have developed superior environmental projects, mainly focusing on reducing, again, the direct carbon emissions, which is basically the energy consumption. We've refurbished a building into becoming a powerhouse. We have built the first new build office building of a large scale into a powerhouse, which basically means that a building goes from being a net consumer of energy to becoming a producer or a small power plant, you might say.
Yeah.
So that's quite extraordinary. And then now we are seeing a sensible shift also in focus from only looking at direct carbon emissions, also to looking into the embodied carbons in a building, meaning that you have to take into account the materials which go into a building also.
Yeah, of course.
So in our latest project, we're doing a small pilot, basically looking into what it takes to reuse materials in a redevelopment, opening up the marketplace more to think circular economy in Norway. And I think we, in the future, probably have to do an accounting on what we do, how much carbon we are using, not only direct emissions, but also embodied into the buildings. So we are very green, I would say. We have, of course, ESG reporting, GRESB, and Entra sustainability, which also kind of proof stamps the greenness of our portfolio. And now currently about 40% of our values our buildings are certified, and our green financing also has reached a level of about 30%. And we'll continue to increase that as we continue to certify our buildings.
But do you see that as a competitive advantage? I mean, do potential tenants, are they very focused on these kinds of topics, or?
I'd say that we're seeing a shift now, because I think also what you've seen with the younger generations being much more purpose-driven, having sustainability up on their agenda. Our large corporates, they see that they need also to be more, what we say, consequent about their how green they are. I mean, having a green office as part of their image is becoming more important. Yeah. So we're basically seeing a shift there and expect that actually our green focus will be more and more valuable going forward.
You have a very high liquidity position now. You're extending your debt maturity profile, low rate of floating rate debt. So from my perspective, you're increasing, or you are focusing on having a more solid financial position than previously. You've always had a strong balance sheet, but now it's even stronger.
Yes.
Also the LTV is below the targeted range. Why is that? Or how late in the cycle are we? Or what are you preparing for?
Well, basically, the property values rising has brought our loan-to-value down to below 40%, as you say. Our target is basically to be south of 50%. So it's not been a conscious or targeted approach to reach the 40%, but we've been helped by market valuations. However, having said that, we do have a very active investment program going forward. So over the next 2 to 3 years, we will increase our capex from current levels of 1 to 1.5 billion to maybe 2.5 to 3 billion, meaning that our loan to value will be brought back to 43-44%. And that's still a very strong balance sheet, but also gives us the flexibility to act on any opportunities which might arise.
So it's not you being worried about any market crash going forward? It's just
I think that we have been a bit modest in what to expect going forward, basically, or prudent. Having seen now how interest rates are kind of expected to remain low, investor interest is now still very strong in Norway, both from local investors, international investors. We don't see we don't expect any yield spreading out over the next couple of years. So, no, we're comfortable with the market situation, definitely. But we like to have the opportunity to do anything if the right things should occur.
So having some dry gunpowder,
is always nice.
Yeah.
Yes.
It's just difficult to find good objects, I guess. It is a very tight transaction market.
It is a tight transaction market, and our approach has basically been to pick assets here and there. We would like to do, we could like to do bigger things, but as you say, it's a tight market. Yeah, everybody wants to buy today.
Yeah. So from that perspective, it's good that you have this large project portfolio.
Yes.
But then in addition, you have some large refurbishment projects that will be coming up as well.
Yes.
Could they be a potential headache in terms of reletting, or are you comfortable with those?
If you take a look at our track record, we have a history of delivering our projects on time, cost and quality. Having said that, we've also had super profitable projects. As an example, our university building at the Tullin Quarter, reporting at the yield on cost 5.9%, probably valued below prime yield. Our projects have also been helped a lot by yield compression. Looking into the redevelopments, we will not get any extra volume as part of the project, and we are also seeing that the construction costs are rising. So we definitely do not expect to provide the same super profitability in these projects going forward, but they will definitely meet our profitability requirements. If you take a look at the Oslo market, we have a situation where the vacancy in the city center of Oslo is currently 3.5%. And most of the new supply coming in over the next couple of years is actually our own projects. And there will be some additional supply, but a lot of that is actually more in the fringe areas of Oslo at Økern and Skøyen. So we are very comfortable with the situation and have a big job to do, basically. And that's what we do.
But given your solid balance sheet, some of the investors I speak to would suggest you giving back more to them in terms of higher dividends, a buyback program that is being continued. What are your thoughts on that?
Well, as I mentioned, we have a low loan to value, relatively set now, and we also have a fairly strong capex program over the next couple of years. So we do believe it to be right to be a bit prudent about our loan to value. However, it also means that we have the opportunity to go that way if we should choose to do so.
Okay, so there might be a positive surprise then coming.
We haven't discussed what we will do, but we have a strong balance sheet.
Yeah. And then speaking about the state ownership, they decreased their share further this June, so they're now down at 22%, I think.
That's right.
I know you probably can't comment on that, but will they decrease their share further? Do you have any idea?
You're very right. We don't know anything more than you guys do, but they have had the mandate to sell since pre-IPO, and they've chosen to do it stepwise, and we have no information on what they plan to do going forward.
Speaking about the property markets, many investors are occupied or worried that they see potentially interest rates coming up, yields coming up as well, much more supply in Oslo, your main market, going forward. We've been talking briefly about this before, but what is your view? Are you optimistic about the future in terms of the development of the property market in Oslo? Or do you see any clouds on the horizon?
We are very comfortable with the current situation. We see that yields are probably going to remain stable going forward. We have a consensus report where we ask also the leading specialists in the market every quarter, and also there we see that the expectation is that we will remain stable for this year and next year at least, around the current levels of 3.7%. We also experience that the demand for real estate in Norway is very strong, so also pressure from investors keeping the yields down. In respect of market rents, we have seen very strong growth, specifically in the Oslo market, 20% over the past 4 years. We do expect market rents to continue growing over the next couple of years. And as previously mentioned, from a supply side, we are also very comfortable with the situation, given that the Oslo market currently, looking at the city centre, is at a very tight level of 3.5% vacancy, so basically not in balance even. And the supply, known supply coming into the market is a lot of our own projects also in the city centre. So it's a good spot to be in. But still you're trading at a discount to Entra.
Why do you think that is? Many of your competitors trade at a premium. You're one of the weakest actual performers here to date. What is your comment on that?
I think I'd like not to comment on the development of our share price. We try to do our best every day, make the right decisions, develop our portfolio to the best, and leave it to you guys to make your evaluations on share price.
Well, I have a buy recommendation, so I think it's a good company to be invested in.
Yeah, that's good.
Thank you very much for coming here today.
Thank you.
Sharing your insight.
Yeah.
And hopefully we'll see a good development going forward as well.
Yes. Thank you for having me here.
Thank you.